Good morning, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today's morning session, I'll be covering on this topic called warehousing and refund under customs law. I thank Board of Studies ICAI for giving this opportunity to talk on this particular topic for today's session. As a protocol, before we start our discussion, I wanted to have a confirmation from any one of you. You are able to watch my video and also the audio is proper. Once I get a confirmation from any one of you, I'll go ahead with my today's topic for discussion. And students, please be aware, there is a portal where you can post your questions with respect to any questions you have. You can unmute and you can ask me questions, or you can post me in the question window. Anything is okay. Yogesh, thanks for the confirmation, ma'am. Let's start with our today's discussion. And before I start, students, couple of suggestions. I hope you have this institute material, Board of Studies material. This hard copy, if not, you have a soft copy which is given by the institute. You can see on my screen the warehousing chapter. Similarly, you also have a refund chapter. So I would request have this hard copy or soft copy with you so that it will be better for us to have a detailed understanding, right? This topic, what you call warehousing under customs law. Refund, anyway, some of you would have dealt with refund under GST law. Provisions of the GST law are very much similar to this customs law. Okay. Now, before I start with this particular topic, I'll give you a little background. Any topic, when we think of learning, if you know the purpose why this particular topic has existed, you would have a better understanding to learn this particular subject in a better fashion. I'll give you a couple of examples. Okay. There are few examples. First, I'll take you through the examples. Then I'll come back to the terminology, what we use in this particular warehousing chapter. Always understand that this subject, what we learn, will help us in future when we get into the industry. When we work in an organization as CEO, CFO, or maybe a consultant, these topics would help us to give a glimpse of how we can use the existing provisions to fine-tune our business requirements. Say, first example, I have a business where I may deal with golden bullion, or I may deal with oil import and export. So when I deal with this bullion or oil, you would have noticed that the prices of these particular items are very volatile, very volatile. Today, every day, if you see the news, the value of gold is so much and month back is so much. It may go up in near future. So always there is a speculation that prices of the bullion is going to increase every fortnight. Similarly is your oil barrel prices. So because of some global economic scenarios, the oil prices may jump, may fall down. Coming down is very rare we will see, but it keeps on fluctuating a paisa here and there. So those circumstances, I as a businessman, if I have an option, rather than filing a bill of entry and getting into my factory or a godown, there is a concept called warehouse, which is called bonded warehouse. So this particular bonded warehouse is the place where I store my material. So this is where my concept of warehouse comes into picture, which we will understand in a detailed fashion. So what is the meaning of warehouse? This is a place meant for storage of goods, raw material or finished goods. In general, whenever we talk about this term warehouse, this is an area where my finished goods or my trading items are stored in general. This is a place designated for general or specific purpose. So I store the material over here, maybe for general purpose, maybe for specific purpose. When it says general purpose, let's assume I have big warehouse which is called transit warehouse. Whenever material are in transit, because of no overnight stay or some reason, the truck owner comes to the warehouse, parks the material, and a point in time, he takes back the material. Specific purpose. Let's assume that there is a cold storage. So whenever people wanted to store the agricultural produce or the animal husband, the fisheries, this cold storage has a specific purpose that the material will not get deteriorated. That is the specific purpose of a warehouse. In transit, temporary warehousing, we have discussed that is in general. Activities permitted or allowed on goods stored in the warehouse. You imagine these days we have this what you call a big basket or no Zepto or various other gig aggregator business model. You would have purchased, say, let's take example onion. Let's take example of a big basket. Onion comes in a big sacks to the big basket store. When a customer places an order, the order would be in terms of half kg or kg. So what these people do in this particular warehouse, they open the sack, they put into smaller packs of 500 grams or a kg. So you could have an activity of packing, repacking, or probably an aspect called manufacture, which could be permitted under warehouse. Now, this particular activity, which I was mentioning, no, activities permitted or allowed in a warehouse. This is one of the beautiful concepts which would be relevant for multinational companies when we think of this concept called warehouse. Documentation relevant for goods in, goods out. You can understand, you can imagine under GST law, whenever there is a warehouse being operated, the intent of the GST officers is to understand that, hey, look, when you are operating a warehouse, I would like to understand the material which is coming in. Do you have details for that? That means to say, who is the consignor? Who is the consignee? What sort of materials are stored in this particular warehouse? How long this material have been kept in the warehouse? So there is an expectation that the goods which are coming into warehouse have been stored for a particular, please, full screen PPT. Is it not full screen, ma? Let me stop. Let me just stop and reshare once again. Hope, okay, thanks for the confirmation. Yeah. Okay. We were talking about this activities permitted or allowed on goods stored in warehouse, right? Now, this is one fantastic and beautiful option what we have under customs law, where I can manufacture the goods, I can do the activity of packing, repacking, all together in this particular warehouse. So this, I'll take you through one example as you know, we travel through a couple of other slides, how we use this particular warehouse activity for my business. I was talking about documentation. So the expectation from the GST officer, similarly customs officer, when did you brought this material into warehouse? What sort of material you brought? The quantity, is it in liters? Is it in kgs? It is in boxes? What kind of quantum you have those items? Do you have any goods which are brought into the warehouse? If so, what is imported? What is brought from a domestic tariff area? And what is the stock for those items? What date it has come? What date it went out? On what basis? Like, no, you have any bill of entry, into bill, or ex bond. What kind of documents you have for that? Then, person in charge of a warehouse. Always, like, no, we try to have something called custodian. When we talk about a warehouse, the person in charge of a warehouse, we call him as a custodian. So, in case of a custodian, who is the person in charge? What is the item? is allowed to bring into this particular warehouse. Let me just clear this. Just give me a moment. Person in charge, the person who maintains the records, the person who keeps a watch window, like he's a watchdog for the warehouse activities. Do you do any trading activity? Do you do any packing, repacking? Do you do any manufacture activity? Who brings the material? Who takes the material out? Whether the owners of duty discharge, the customs duty payment, has it been undertaken? Whether the customs officer permitted to bring this material into my warehouse. All these are the activities where the person in charge would be a responsible person. In case if he fails, there are penal provisions under customs law, which we are going to pay on these particular items, right? My inputs, examination, there's no hard and fast rule that you need to remember the sections. If you learn the provisions, this is good enough. And when you give your answers, if you know the section number, section 48, 50, 52, 60, 70, you can quote. If you don't remember the section, you can just draw the attention of the examiner as per the provisions of Customs Act, as per the provisions of Customs Tariff Act. That's good enough. No need to quote a section. You don't know the section, but you quoted a wrong section, there's a half mark which would be deducted because you have quoted a wrong provision. So please keep in mind, there's no hard and fast rule that you have to compulsory quote the rule, section, or a circular. Now, coming back, you can see on my screen that there are items which I intend to bring into warehouse. What is the intent of me to bring into warehouse? Probably, I would like to defer my payment of customs duty. I'll give you the basic background. Now, when the goods come into customs territorial waters, there's a procedure called, there's an intimation which will be made by the master or what you call the pilot, who gives a intimation that, hey, look, I'm carrying this consignment in my ship or in my vessel or in my flight, in this particular vehicle, which are being caused into the customs area. Now, when an intimation is made by this particular person, the owner of the material, who happens to be the importer, have to file something called bill of entry. Bill of entry is a permission where goods are permitted to come into the domestic tariff area, right? Domestic tariff area. Now, there are reasons where, sir, I have received this consignment maybe a week, a month, a fortnight in advance than my scheduled requirement. So there is an acute shortage in my factory. I have a factory. I have a raw material store. This material which has come into India, I don't have a space in my factory to store. What can I do? That point in time, I have this concept called warehouse, which I call as a bonded warehouse. I'll give in detail this bonded warehouse, what kind of warehouse we have in couple of slides from now. So keep in mind, as an importer, I don't want to file import bill of entry. I park these goods in a place called warehouse. So technically, under customs law, warehouse is a premises which is permitted in general, to store this material for a temporary point in time. The reason, I don't have money, or I don't have place, I don't have a customer for which I brought this particular material. Till I find a customer, I park this goods in the warehouse. I don't have a space in my factory. I park the material in a warehouse. So these are the reasons where you push or you put your material in your warehouse. This is a starting point. Let's move further. Now, this is one important and beautiful example I always give for students to understand. Uh, let me just come to one, let me come to a Word document. Then I'll make you understand this particular example. Right now, under GST law, like if you see the rate of 28%, there's something wrong. Let me just. Technical issue. Just give me a minute. Let me set my mouse pad. Yeah. Now, earlier, there's a item called DG set. DG set is what you can say is when the power goes off, there's an engine which is called diesel engine, which restores your power backup, which is as good as your UPS, uninterrupted power supply. The DG set earlier was charged to 18% GST. 18% was the rate of GST on DG set. But if you see the components of a DG set, this DG set would have something like engine, then acoustic panel, then you have your control panel, then the electrical wires, which are required for assembly and connecting point of view. Now, earlier, the engine was subjected to 28% GST. The acoustic panel, this is like a dabba, the outer shelf. When I don't know how many of you have seen the small generator, which is Honda make. The moment you switch on, that makes a sound which is used in a couple of rural areas for the purpose of UPS. These days, we have UPS all across, but a point in time, we didn't have this DG set. These are used by large industries like a mall, a bigger office, the bigger setup. When the power goes, the DG sets restores the power immediately back. So this acoustic panel is the outer shelf which reduces the noise. The acoustic panel is subjected to 18% GST. Control panel, electrical item, subjected to 18% GST. Electrical wire, subjected to 18% GST. Now, if you see the finished goods, my finished goods are subjected to 18%. But the composition of my raw material or the ingredients, one of the major item which constitutes 40% of, not even 40, it would be average of 60 to 70% of my total cost. Assuming for a moment, if the DG set is going to cost me 5 lakh rupees, out of 5 lakh rupees, 60% of that, around 3.2, 3.5 lakh, would be the cost of the engine itself. So what is going to happen? My cost of purchase is much, much higher compared to my finished product. Now, this is one particular model where I have a DG set which needs to have an assembly of these items. I need to assemble these items. Now, imagine a business model where I manufacture. Now, for a moment, let's take example. There's a company called ABC Private Limited. This ABC Private Limited manufactures the acoustic panel, it purchases control panel, it also purchases the electrical cables. Engine is supplied by the customer. Engine is supplied by the customer. So what I would do as a manufacturer, I would get an engine from the customer. I manufacture acoustic panel. I do the cabling control panel. It's like connecting the dots. I just connect the dots and the DG set is manufactured. So on the engine, I put on the control panel. I do the cabling work. I put the dabba on top of it. My DG set is done. This is called assembly, which happens. So entire this activity, if you visualize. Now here, my value addition is happening only from a acoustic panel and the assembly which happens to, right? So in this entire ball game, earlier I was paying 28%. Now I would be paying 18% GST under GST law. Why I'm talking GST example? This is a domestic example. Now, what if I get into a international market? I get into a international market. Now, for a moment, let me change this to design, layout, orientation, landscape. Yeah. Now, for a moment, let's assume that there is a company called XYZ Inc. who is there in US. They manufacture this engine, the diesel engine. So this particular entity says, hey, look, you manufacture acoustic enclosure, right? There's an entity, there's a customer called PQR Limited. This particular entity, PQR Limited, is there in, say, Singapore. Also, let's say they have their business in, say, Sri Lanka. They also have a business, many customers, Singapore and Sri Lanka. For a moment, two nations, they have their business. Now, ABC Private Limited manufactures in India. The engine comes from US. Post-manufacture, the finished goods needs to be exported back to Singapore, Sri Lanka. Now, for a moment, if this engine, which I'm saying 60% cost, if I have to import, file a bill of entry, bring this particular engine into my factory, do the assemble, again take back out of India, what I have to do? I have to pay customs duty. Then I need to send back again out of India and claim a duty drawback. I need to claim a duty drawback for duty which was paid. Now, what happens here? My working capital gets blocked in terms of a customs duty where invariably I'm taking back from the government of India. That is the customs authority. So assuming if I import 50 engines, like a simple mathematics, engine cost is around, say, I'll come to one Excel file so that it will be easy for us to check on these figures. For a moment, I have to import this material, right? The DG engine cost is around, say, 3 lakh. This is per unit. Quantity, value. Assuming I import 100 pieces. On this customs duty, I pay hypothetical. Let's assume that all inclusive, like assuming 15% rate, 10% your cess, IGST, all put together. Let's assume that I am going to pay at the rate of 20%. Just hypothetical example, students, 20%. On this, I am going to pay 20%. This is my cash outflow. I manufacture, and within 6 months, I re-export. So when I re-export, I as a manufacturer have to file for because of connections, I'm not able to use the mouse properly. Okay. This 60 lakhs what I have paid, I need to claim back as a duty drawback post my export out of India, right? So this 60 lakhs is a blockage of my working capital. Now to get away from this, I have an option called warehouse. So here, now what we will do, I import engine, I bring this cable, the control panel, the switches all together from my factory to the warehouse. These particular items, I do assembly in a warehouse, and you can see this component called DG set, right? The dabba. All this will be put into this dabba, which my final DG set gets manufactured. So this is where my concept of warehouse comes into a major play for me to leverage on business model, reduce my working capital point of view, right? There's one question from Sanjay. For domestic market, for the purpose of GST applicability, it would be composite supply. Is that right? Definitely, yes, ma'am. When I do the assembly, this particular business model, what Sanjay is asking is, as a manufacturer, so I have an engine, I have an acoustic, the control panel, the cabling, I do all the assembly. What is the final product which is manufactured? This is DG set. So I would levy GST considering the HSN for DG set, not the engine, not the electrical valves, not the control panel. So the final product, the principal supply, which happens to be a DG set under section 8. Sanjay, I hope this is clear, ma? For other students, I would suggest that if you study the subject just for the sake of exam point of view, it will be very tough for you to understand. When you know the background of this concept, when you know how it works, lifelong you will remember this particular concept, where you can use this particular business model. So here, for me as an importer, what I would do, I import the engines from US or maybe another country. I bring it and park it in a warehouse, and I raise a tax invoice saying that it is meant for zero rated supply. I call zero rated supply. When I say zero rated supply, no GST is applicable. So you can see these items, right? Cable, switch controls, control panel, 1, 2, 3. I procure domestically. I raise a tax invoice. I take these items to my warehouse. Warehouse is your customs premises, customs station, which is beyond your domestic tariff area. So when I take the goods out of India, section 16 of IGST Act, I would call that as a zero rated supply, the zero rated supply, right? So here I do all this assembly and I take the goods out of India. By doing so under customs premises, that is in a warehouse, I save my import filing bill of entry, getting the goods, payment of customs duty, again filing a refund application or getting a duty drawback under 75. All that particular ginget is taken away. This is where I use this concept called warehouse. Next, I give one more example where I use this particular warehouse. Now, this is a third business model where there are electronic gadgets. You can see on my screen, various electronic components. For a moment, I do a trading activity. I import these items in bulk. Now you would see on this aggregator, that's the electronic commerce, you have big billion day, big sale day. Now Dashara, Diwali, Christmas, New Year, these electronic aggregators, they come with offers where you will see price slash, which is unimaginable. For a moment, the laptop which we work, in general, it's available for say 45,000. On the big sale day, I would get the same laptop for 40,000. There's a slash of 5,000. Most of the consumers wait for these big sale day or big billion day to save prices. Now, look at the business model at the back end, how it happens. Assuming now we are on 28th of November, my new year happens, it's a month from now. What I would do is, as a business person, I would import in bulk these laptops, printers, or the electronic washing machines, televisions, all in bulk at a price. When I import in bulk, my value, like I can command and I can demand for a better price. In general, if the price is available for 42,000, I can buy for 40,000. There's a big saving of 2,000. So this is an opportunity for me to make a volume. Now, what I would do? I import the material. On 28th November, I have imported the material. My big sale happens on 25th or 20th December onwards. Now, what happens here? 20 days in December, 2 days in November. 22 days, I have to stock this material. If I pay my customs duty right now, assuming a volume, like I was giving in a hypothetical example, I have imported a consignment worth 1 crore. The customs duty on this, assuming 15%, 15 lakhs is my customs duty I have to pay. Instead of blocking my working capital of customs duty 15 lakh for 22 days, I want to defer this particular item. Now, what I will do? I file a document to take these goods into my warehouse. I take these goods into my warehouse. So this is a concept, or this is a model where I import material in bulk, park in a warehouse, look for an appropriate day, then file my bill of entry to pay the customs duty and clear the goods into my domestic tariff area. So here I have written that I import in bulk, identify a potential customer for bulk sale, transfer the goods in the warehouse before filing bill of entry for home consumption. Now, there are two modus operandi which is permissible. Option number one. I wait for that big billion sales day or the big event, then file a bill of entry, bring the material and put it on sale on the aggregate website. Option one. Option two. Instead of doing that, I keep it in a warehouse. I find a potential customer. I bring them and show, hey, look, these are the materials I have. I draw samples to showcase to them. And when they find this is good enough, then I transfer the ownership where the particular person files a bill of entry. Now, I'll give a couple of inputs at this point in time for you. What is in store for you? Students, I would put it this way. Not everyone has a knowledge of customs area. Unfortunately, most of us, when we are in the stream of the CA curriculum, inevitably, everyone gets through the audit, the internal audit, statutory audit, ROC filing, and income tax. So 80 to 85% of you would have a very good exposure on income tax, ROC filing, statutory audit, accounting, GST filing. The 10, maybe hardly 5% of you would have an exposure on customs, right? Now, this is not from exam point of view, from your career perspective. How would I make my career from customs point of view? There are formalities, there are procedures. Not many would have explored, not many would have seen how I can use it for my business. I'll give an example which took place 3 to 4 years back. 4 years back, ROC have mandated that all the directors should possess the digital signature compulsorily. Now, a point in time when a company has to file the documents with ROC, any one of the director would have a digital signature. We would do the filing using the DSC. But they said no. KYC is compulsory. All the directors should possess your DSC. That point in time, overnight, containers to containers, the pen drives came into India. They were kept in a bonded warehouse where when this ROC notification came into, MCA notification came into picture, they cleared these pen drives into the market. Reason? Every director wanted to have a digital signature, maybe for 1 year, maybe for 3 years, maybe for 5 years. That point in time, this digital, the tokens, the pen drive were stored in a warehouse and cleared the moment this notification came into picture. Now here, I have a business potential, bring, park, showcase, find a potential customer, transfer the ownership. When I transfer the ownership, Schedule 3 of your GST law, supply, which is neither considered as supply of goods nor supply of services. In Schedule number 3, entry number 8, clause A, transfer of goods in a customs station, in a customs warehouse, will not be considered as supply of goods, supply of services. So for a moment, let's assume this way. Sanjay happens to be a customer who wanted to buy these tokens. On the other hand, we have Yogesh. Yogesh has imported the material. He parked this material in a warehouse. Sanjay, Yogesh appointed, 2-3 people like Praveen or Sanjay, Ashok and all to find out a potential customer where he can transfer the ownership. So Sanjay came forward and say, hey, look, I wanted to buy this particular material. So when the transfer of ownership happens from Yogesh to Sanjay, Schedule 3, entry number 8, clause A, neither supply of goods nor supply of services. No GST would have been paid. What happens? Sanjay would have filed the bill of entry and caused the material into his warehouse or his factory. So that point in time, the person who pays customs duty would be Sanjay. So I would use my GST law, I would use my customs provisions for my business purpose. Students, I'm spending so much of time on these examples. Reason, the theory what we have, it will take 30-45 minutes for us to understand the theory. But when you read the theory, examination point of view, it may not reside in back of your mind. When we have these examples, you have this urge to understand the provisions in a better fashion. That's the reason I'm spending a little detailed manner to make you understand these concepts. Going forward, now I have a couple of terms which are borrowed from your Provisions under Customs Act to understand this term called warehouse. So first item, into bond bill of entry. Into bond bill of entry. When I say into bond bill of entry, I have a term called bill of entry. In general, you have studied when you have studied on valuation, when you have studied chapter 2, chapter 3, where filing bill of entry, filing shipping bill. These are the terms which you have studied, right? So extension of this is your into bill of entry, into bond. So when I say into, this is indicating that there is the intent to take the goods to warehouse. In general, when I file bill of entry, the goods travel to domestic tariff area. So here the concept is instead of me traveling, instead of me taking the goods to the domestic tariff area, I would take these goods into a warehouse. So what I do, I file a document called into bill of entry. That into bond is where I file this particular document with the proper officer under customs law, who would give a permission for me to transfer this material to warehouse. Then ex bond bill of entry. Ex bond bill of entry, like into is into the warehouse, ex bond is out of warehouse. This is out of warehouse. So when I bring into warehouse, into bond. When I take out of the warehouse, I call X bond. In these two terminology, you would come across a term called bond. Now, under GST law, you would have remembered, you would have come across a term called LUT or bond. So when I have to make a zero rated supply, under the GST law, that is goods travel out of India, goods are supplied to SEZ unit or SEZ developer. I have this concept called LUT or bond, letter of undertaking or bond. Under customs law, I have no concept called LUT, rather I have a concept called bond. So in simple terminology, there is a value which is undertaking. So I would say, I, Praveen Kumar Gela, hereby undertake to pay the value of customs duty on the goods which are brought into the customs warehouse in case if I don't comply with the customs provisions. I also undertake to pay to the customs authority the interest and penalty or fine applicable on these goods. So in general, this bond is nothing but binding to pay. Now, who is having a binding nature? This is binding on the importer. So here, the concept is the importer, instead of taking the goods into this domestic tariff area, this importer wants to retain these goods in a warehouse. Then he has to give a declaration, which is called a bond to the customs authority. That is your proper officer. Students, when you write your answer in your examination, you can use a term called proper officer. Similar to your GST law, PO is your proper officer. Could be an assistant commissioner, could be a deputy commissioner, could be a joint commissioner. So the proper officer to whom I give this particular declaration. Then, kind of warehouse. I have a public warehouse, I have a private warehouse, I have a special warehouse. Now, depending on the goods, depending on the person, there are classification like public, private, special. Now I'll come back to my Word document to make you understand this particular concept. Students, if you have any doubt, you can pause me. You can let me know. I'll elaborate once again. Now, warehouse, I have three categories. One is public. When I say public warehouse, in general, all importers can store. Example of a public warehouse, I have something called the bank. Which is open, which is available for people at large. Similarly, or you can imagine an example of a bus. The bus which is meant for general public. The Road Transport Corporation (RTC). Any states you have the government operated bus which is meant for general public. This is one category. Second, you have one more category called private. Private, which is meant for a particular licensee. The holder of a licensee operates a warehouse which is called private warehouse. Only that particular person is permitted to hold the material in this particular warehouse, which is called private warehouse. Third is your special warehouse. Special warehouse where certain notified goods are permitted to store in this particular special warehouse. Please understand, this is not under the control of a bond officer, not a government officer. But this special warehouse is under the control of a bond officer who happens to be a government nominated authority. As on today, students, you have this gold, that is no precious metal. Then few no drugs which are of high no suspicious for like no narcotics and other category kind of items. There are notified items which are permitted to be put in a warehouse called special warehouse. Special warehouse is under lock and key of a government officer. Public, which is a warehouse designated as a public warehouse. Now again, what is in store for you when you read this particular subject? Once you finish your CA, once you are in business, you can imagine you have a warehouse. In general, instead of having a regular warehouse, you can have a public warehouse under customs law, where you permit the importers to come store their material, take the material out of the premises. Not everyone has a knowledge to operate this particular warehouse. This is a premium service. Now, what do? You go and educate the corporates, the industry. Hey, look, these are the customs provisions. I guide you. So when you give a guidance, they come and take your services. So you work as a chartered accountant who handle these large corporates. Also, you operate this logistics as a business point of view. Now, these are the three warehouses which you have as on today from customs point of view. Keep in mind, private is only for the licensee, public in general, which is available. Special, this is a modus operandi where only under the guidance of a bond officer, you are permitted to store the material. Coming back. Next, clearance of goods. Now, when I bring the goods into my warehouse, option 1, I can export out of India. I can export out of India. Like I gave this example of a DG set. I manufacture and send this DG set out of India. Option 2, clear for domestic tariff area. Clear for domestic tariff area, home consumption. There's one more option which I have not brought in here. Third option is your transfer to another warehouse. Transfer to another warehouse. That is one public warehouse to another public warehouse. Generally, though this option is there, we wouldn't exercise. But the goods which are kept in a warehouse, I can export, I can do a home consumption, I can transfer to another warehouse. Now, when I talk about these three scenarios, is there any other scenario? Answer is yes, which is a non-permissible or which is a non-compliance activity, which is called smuggling. I take the material out of this particular warehouse without doing no tracking or maintaining proper records, which is called smuggling. Smuggling is a non-permissible activity. So, as a custodian, as an in charge of a warehouse, if you don't keep a track of material when there is an inspection which happens, that is deemed to be a non-compliance with the GST provisions. So, examination point of view, whatever I'm explaining, you can expect 2 marks MCQ. You can expect 4 to 5 marks theory question. XYZ Private Limited, who wanted to bring material into warehouse, is exploring the options. Kindly elaborate what options an importer has got when the goods are stored in a warehouse. So you will say the goods which are brought into warehouse, you can have a private warehouse, public warehouse, or a special warehouse. The goods from the warehouse can be allowed for manufacture, can be allowed for packing, repacking. The goods from there are permissible for export out of India, permissible for domestic tariff area, which is called home consumption, or permissible for transfer from one warehouse to another warehouse. A simple theory question which carries 4 marks. So when you know the concept, I answer any question in my examination. So let us understand the way how I operate a warehouse. Allowance for volatile goods. So there are circumstances where there are goods which are susceptible for evaporation. Susceptible for evaporation. That is your gets condensed. The value or the volume gets condensed. The gas, the petrol, diesel products, or any other ingredients which have a nature that it gets moisturized or gets evaporated easily. So these goods, the customs officer, proper officer may allow a certain percentage as a normal loss. Please remember, there's a term called may. It is not shall. It is not shall. Like example, for a moment, Sanjay has imported a bulk consignment of camphor. Now, camphor, this is where we use in our Hindu tradition whenever there is a puja, whenever there is a occasion. I use this camphor for my activity, rituals. So the camphor is susceptible for evaporation. When I unpack, I open the pack from a bigger, 50 kg compound. I slice it, make into 10, 10, 10, 10, 5 different packs. So Prithvi is a customer. Sanjay unpacks, cuts, repacks. In the process, the 50 kg pack may get reduced to 48 kg. Reason? The moment I open, there's a evaporation which happens because of your moisture, because of the density of the atmosphere. So here, depending on the nature of the goods, I bring it to the knowledge of proper officer. My dear officer, when I have imported, it was 50 kgs. In the process of my activity, there was a maybe 100 grams, kg, 2 kg. There's an evaporation. So depending on your justification, the proper officer may allow for the volatile nature of goods, which is called allowance. It's not shall. Again, examination, 1 mark MCQ. They'll give you a case study. They'll say, depending on the nature of the goods, because of the volatility nature, proper officer has a right, has an obligation to make an allowance. True or false? Answer, it is not mandatory. It is optional. It is discretionary in nature of a proper officer. Then moving forward. Indemnity bond, consignment bond, general bond. Now, whenever I import my material into the customs area, I take it to a warehouse. As an importer, I have to execute a bond, which is called indemnity bond. Like similar to our GST law, LUT or bond. In customs, I have to execute a bond, which is called indemnity bond. So this indemnity bond, in general, there is a benchmark where I undertake to make good. I undertake to make good of the revenue. I make good of revenue. So what is that revenue? Duty, that is customs duty, interest applicable if any, penalty because of non-compliance with the customs provisions if any, fine because of some documents procedures which are violated. Now these are the 4 components which are there. The customs authorities are obligated to collect. So when I execute a bond, I undertake I Prithviraj so and so imported consignment for worth so and so. On this so and so customs duty is payable. So I undertake to pay the duty of customs, the interest, the penalty, fine which are applicable. I'll write it for your understanding. Duty, interest, penalty, fine. Now, question may come to your mind. So when I import the material, I need to pay customs duty. Where is the question of interest? So here, the interest is for loss of revenue. Now, government doesn't want to give a free hand, leverage on the goods which are kept in warehouse for a long point in time. They wanted to have a limited period. That is, in general, they have given 90 days window. 90 days window. Students, I would recommend make a running notes. Whatever I'm writing on my screen, when you are listening, please make whatever few points I'm writing here. These are the MCQs which are going to be tested in your examination point of view. How it will help? Whatever you're writing in your notes now, when you sit for revision, the moment you open warehouse, you will see bond, you will see, say, like, no, interest, duty, penalty, fine. Now, these are the MCQ questions where they'll say, examine the purpose of bond. You will have option one, to pay customs duty, to pay customs duty interest, to pay customs duty interest and penalty, to pay customs duty interest and penalty. 1, 2, 3, 4. Now, answer will be 1 and 2, 1 and 2, 1, 2, 3, or 3 alone, or 4 alone, where you'll get 1 mark from MCQ point of view. So when you write down, it'll click to your mind that, this is the reason why I have to pay penalty, I have to pay fine, right? So this will help you from your revisionary point of view. Coming back, interest. Government wanted to give a free hand. Say Prithviraj, Sanjay, whatever you want to put into warehouse, do it. In general, up to 90 days, you need not pay interest. Beyond 90 days, there is a clock which starts ticking where you need to pay interest, penalty. Penalty is where I do a non-compliance. Like example, smuggling. I imported 100 watches. On the day when the customs officer did an inspection, there were 80 watches. What happened to the 20 watches? Said, I don't know what happened. Now, if you say don't know, it's as good as yielding in a smuggling activity. A penalty will be levied, duty equivalent to the value of duty, which is called penalty. So assuming I have to pay 5,000 as duty, 5,000 will be levied as penalty. Fine. Now, fine is general, like maintenance of records, keeping a proper documentary evidence, keeping this into bond, ex bond, the what you call the bond value, debit, credit. There are a couple of procedural customary things which I violate. So they say, because you have not maintained proper records, I'll levy a penalty, I'll levy a interest, I'll levy a fine. Now, fine of 10,000, fine of 5,000, etc., which will be imposed. So as on today, 4 elements like duty, interest, penalty, fine. Now, when you think of Ramayana, Rama, Sita, Lakshmana, and Hanuman. Rama, Sita, Lakshmana, Hanuman. Probably one way. Or Rama, Lakshmana, Bharata, and the fourth brother. This is where I correlate my concepts with the basic, to understand. This is where I have to do 4 elements I have to pick. Now, coming back. Please keep in mind, there is a indemnity bond, there is a consignment bond. Consignment bond is specific to a consignment. It is a specific to a consignment. Then general bond, which is on a particular track of duty paid and revenue involved. Now, what is that we are trying to understand here? Whenever I give a bond, there is a mechanism how I calculate this bond. This bond amount is calculated generally 3 times the duty. The bond value will be always 3 times the duty involved. So assuming I import a consignment worth a crore, on that consignment, my customs duty payable is 20 lakhs. My expectation by a proper officer is that 60 lakhs worth bond has to be given, bond or security. So why is that 3 times? To make good of your duty, interest, penalty. So the government, the customs officer doesn't want to wait and watch whether you're going to pay, whether you're not going to pay. So in general, they wanted, boss, 3 times the duty, you execute a bond. Now this bond, I have, I call this as a running bond. Where you would see let me come to a Word document to make you understand this. When I execute a bond, For a moment, I have executed a bond for rupees 60 lakhs. So it will be like a ledger account for you. Particulars, debit, credit, and also say date. On say 28th November 2025, bond executed. I have executed a bond for 60 lakh. On 28th November, I have filed a into bond. I have filed a into bond. Consignment worth around say 50 lakh. And say my duty payable is say 20 lakh. So what I'll do, I'll debit my bond ledger for 20 lakh. So you would have say closing balance. This point in time 60 lakhs. After debiting 20 lakhs, you have been left with 40 lakh. Again on say 30th November, another consignment, I'll say this I'll call consignment 1, I'll call consignment 2. Consignment 2 into bond. Into bond is my application where I am bringing material into my warehouse. I have filed into bond where again I have debited my duty for 15 lakh. Then my balance will be 40 minus 15, 25. On 5th December 2025, say I have cleared consignment 2 by filing X bond. X bond is where a procedure I take a permission of the officer to take the material to domestic tariff area. I am willing to pay the duty. So when I file X bond, I will give a credit of 15 lakh. So my closing balance resumes back to 40 lakh. Right? So this is how I maintain a bond ledger for the value of duty which I obligated to pay. I have agreed to execute with the proper officer. So when I give a bond of 60 lakhs, this is how I keep a track. This was a concept which was there under erstwhile central excise provisions. Under erstwhile central excise provisions. Under central excise, I used to have something called PLA balance. We had personal ledger account balance. So I need to run through this ledger. Now these are the age-old practices which continued under customs law as on today. Students, again, these are the concepts not many know. Because of this reason, we see very few people practice in customs area. Now, when you pick an area where good potential is there, you enjoy your career coming back. Hope we are clear so far. Hope there are no doubts more. Before I go further, just let me know. Great. Thanks for the confirmation. Moving forward, now, as I explained, there are 3 examination. 1 theory question for 4 marks, probably MCQ for 2 marks, you can expect. Concept of warehouse, you have 3 concepts: public warehouse, private warehouse, special warehouse. Public warehouse, this is a concept where goods can be stored by importer in general. So there is a designated warehouse who have taken a permission, which is like a public warehouse. So the moment there is a public warehouse, I would pay rent I would store my material in this particular public warehouse. So any importer who wants to, like say Yogesh, Sanjay or Prithvi, whenever you want to import any material, what you would do is you go and find a public warehouse, you take a permission of the customs or proper officer, file this into bond bill of entry, take this material, get and dump into the public warehouse. Private warehouse, on the other hand, this is given to a particular licensee, In general, people who wanted to know I gave example of this manufacturing activity, the DG set. Please keep in mind the concept of manufacture or other activity, that is your assembly, is permissible only in public warehouse, permissible only in a special warehouse. Manufacturing or other. It is not permissible in public warehouse. In a manufacturing or other activity is not permissible in a public warehouse. Reason, you have various consignments of various importers. Now there is a susceptibility of the goods getting merged or mixed together. For that reason, MCQ 1 mark question: is manufacturing activity permissible under public warehouse? True or false? Answer: no. In public warehouse, they don't allow manufacture. But in private warehouse, yes. In a special warehouse, under the supervision of a bond officer, yes. So please keep in mind, this activity of manufacture or other, that is your packing, repacking, assembly. When I say other, this could be other than manufacturing, which could be a assembly activity. Permissible only in a private or a special warehouse. Similarly, special warehouse, only dutiable goods notified can be stored. So examination point of view, so what can I expect from MCQ point of view? Who can store goods in a private warehouse? Only a licensee. Sorry, there is some issue. Let me just... Please keep in mind the concept of this public warehouse. In general, this is permissible. Private warehouse, only by a licensee, the importer who is called as a licensee, who has been given a permission, he alone can store the goods in that particular private warehouse. Special warehouse, this is under the lock and key of a bond officer. So these are the ways the MCQs can come from your examination point of view. Who monitors a private warehouse? Answer: licensee. Who monitors a public warehouse? The designated custodian of a public warehouse shall be responsible for the goods which come in and go out of a public warehouse. Can a manufacturer allowed in a public warehouse? No. Is a manufacturer allowed in a private warehouse? Yes. Is an assembly carried out permissible under special warehouse? Answer is yes. Now, these are the MCQ questions which you need to keep in mind from examination points of view. Now, having learned about warehouse, now next concept is your license cancellation. That means to say, sir, I have got the license तो आ गया, काम खत्म हो गया, material manufacture करके, I have an option to export. I have an option to clear for domestic tariff area. What should I do? On the basis of your activity, your license generally will be cancelled. In general, it will be cancelled. That is normal procedure. That is in due course of time. But there are instances where your license shall be cancelled, where there is a triggering point. What is that? Breach of provisions of customs law. There are provisions under customs law which have been violated. What do you mean by violation? I need to maintain register. Registers are not maintained. Like example, let's take an example. Say, Sanjay, hypothetical example, don't find a mistake in me. Just hypothetical example. For a moment, Sanjay has taken a private warehouse. Goods have come to the private warehouse of Sanjay. Now, there is an inspection which has been carried out by the proper officer. Sanjay says that there is a consignment where like 100 kgs of steel came into the warehouse. Now, officer says, yeah, show me where is that 100 kgs. He says, sir, steel is no bari hai, aapko bari padega. You know, look at the answer. Sir, steel bari hai, aapko bari padega. Means I cannot show, you cannot identify. Sir, it's so heavy, you go and verify. I don't have accountability. Sir, no, उठाने के लिए कोई बंदा नहीं है, वो no कौन नहीं कर पाएंगे. No, you find a ways to complicate the business. Now, this is called violation. This is where you create a complication to the business. Maintain the registers, not maintain. Show, people who want to investigate, people who want to inspect, you're not allowing them to inspect. You're not cooperating. A lot of ways. That's called breach. Point number one. Second, I have imported, say, like 100 laptops. 2 laptops are missing, probably smuggling. But you'll say, sir, I have stored the material. I have kept it in lock and key position. Chabi mere paas hi hai. But when I opened the door, 2 material are missing. How did it happen? Sir, pata nahi, sir. I was sleeping. I thought someone came from the roof. He took, again closed the roof, went back. No, very vague answers. No, when you don't have a control, when you don't have accountability, they'll say, boss, I don't want to continue the license. I'll suspend, I'll cancel the license. This is where breach of provisions, breach of provisions. These are the breach of provisions of customs law. Or I gave conditions. When the license was given, there are conditions based on which the goods are allowed to be stored. So what could be the conditions? I gave a permission to store this material for 6 months. But what you did, you kept it beyond 6 months. You said, sir, आज अमावस्या है, कल निकालूंगा. Sir, no, पौर्णिमा है, 15 दिन के बाद निकालूंगा. Sir, गाड़ी का एक्सीडेंट हो गया, गाड़ी नहीं आ रहा है. माने vague reasons. No, you have been permitted for 6 months. Beyond 6 months, you are holding the material. So he'll say, boss, nothing doing, I'll cancel your license. So any of these reasons are triggering points where the proper officer would call for cancellation of such license. Now, please keep in mind principles of natural justice. Principles of natural justice. Now, I have written in technical way where examination don't write principles of natural justice. Elaborate in detail. What do you mean by that? Sir, you want to cancel? Do that. Please give a notice. That means to say, put me on notice. Give me an opportunity of being heard. Opportunity of being heard. Audi alteram partem. No, hear out and take on record reasons to believe. Take on record reasons to believe. Now, these are the principles of natural justice. Sir, aapko notice dena hai, give me a notice. You take on record what is that I have to speak. You take on record what is that I have to give it to you in writing. Why you feel that I am not maintained with the provisions. Like example, sir, no, there is a strike, there is a hartal which is going on. I wanted to call for the consignment because of this, like for a moment, say northeastern states, there is some sort of disturbance which is happening in between some communities. So whenever you take out a consignment because there is a strike, because there is a disturbance which is going around, I cannot dare to take this consignment out of my warehouse. Now, these are the reasons to believe I cannot take the goods out of my warehouse. So now you will give the examples. Second example. So there was a fire accident. Like I have a warehouse, there was a fire accident. There are 2-3 boxes which are burnt. Now I'm not willing to say that I don't want to pay the duty. I seek for remission. I seek for remission. What do you mean by remission? Sir, I have brought 100 consignments out of 100 boxes. Out of that, 3 boxes were put for fire. I seek for remission of duty on these 3 boxes. Collect duty on balance 97 boxes. Now, these are the ways I explain to the proper officer. After due process of principles of national justice, the officer may suspend the license. During suspension, whenever officer said, I am going to suspend your license, all the warehouse activities will come into a standstill position. That means to say, I cannot bring the goods into the warehouse. I cannot take the goods out of warehouse. And within 7 days of order for cancellation, the goods stored in the warehouse to be either removed out of the warehouse, to be cleared for domestic tariff area, or to be exported out of India. Again, I repeat, within 7 days of order. Like Shoka's notice was given, you gave your reply, your written representation was taken on record, everything was examined, the proper officer passed an order. Passed an order for what? Cancellation of your license. So license cancel ho gaya. What will I do? So I have 7 days. It's not like the moment order is passed, you'll be thrown out of your warehouse. No, you'll be given 7 days time. Option 1, from this warehouse, transfer to another warehouse. Option 2, export out of India. Option 3, file a ex-bond to take it to your domestic tariff area. These are the 3 things which I have to do when an order for cancellation takes place. Students, this is one theory question. Expect from examination point of view. Are we clear? Can we go further? Can we go further? Yes or no? Great. Then, now, as I was telling you earlier, how this bond, general bond, consignment bond, specific bond is executed. Now, there is a modus operandi, there is a theory which is inbuilt into this particular amount to be calculated. Bond, when I execute, the intent of this particular bond is to secure the interest, of the customs officer to collect duty. So interest of government is binding on the importer for what? To comply with all the provisions. So first and foremost, I would like to comply. When you say you're not in a position to comply, they'll not permit you to have a license. Second, to pay all the duties and interest due as per the demand notice. Whenever there is a demand notice which is issued on me, I bind myself to pay the duty, to pay the interest which is due on me. Also, to pay penalty or fine in relation to any of the contravention of such goods. So whatever duty I have, I bind to pay the duty, I bind myself to pay the interest, I bind myself to pay penalty, I bind upon me to pay the fine also. So whenever you have executed a bond, this bond is to take care of these 4 elements which are required, right? Again, to remember Rama, Sita, Lakshmana, Hanuman, or Bharata, Shatrughna, whichever way you want to remember, it's up to you. But these are the 4 elements which I have to keep in mind. And whenever the amount has to be quantified, this bond amount usually is 3 times the duty payable. 3 times the duty payable. If the value of duty is 5 lakh, 5 into 3, 15 lakhs. If the value of duty is 45 lakhs, 45 into 3, it is 105. 120 plus 15, 135. 135 lakhs. This is how my duty into 3 is my bond amount calculated. 1 mark MCQ question. Then, basis for computing bond amount. Now, how is the proper officer? Now, examination, you can expect 2 marks theory question where they'll say, what are the factors to be kept in mind by a proper officer to calculate the amount relevant for bond? Like example, For a moment, say Yogesh wanted to file, put this material into warehouse. Warehouse can, Yogesh goes and says, sir, consignment worth 1 crore has come. I'll give you a bond for 25 lakhs. Take the bond and give me a permission. He'll say, no. I, as a proper officer, let me do the assessment. So when he does the assessment, it should be, there should be a yardstick. What is that yardstick? Now, what is that basis? That is what we are trying to understand. Based on past imports warehoused, and duty involved. So I'll try to analyze your pattern. Yogesh, you were importing electronic gadgets. It was subjected to 28%. So value of consignment into 28% into so and so and so. Sir, 28% GST में था, sir. Now, during no September, there was a GST rate rationalization. 28% was brought down to 18%. Boss, there is a value for it. I'll reduce it from 28 to 18%. I'll do a calculation. So I have a reason. I have going on the basis of past activity or anticipated imports and expected revenue. You're going to import so and so consignment. What is the value? What is the revenue involved? I know. Try to extrapolate the event and then do a calculation. So the mechanism for an officer, the customs proper officer, is on the basis of my past record to know whether there is a, like, no, in customs we have something called SVB order, which is called special valuation bench. Special valuation bench. I get the order passed where they will determine what is the duty payable and what is the what do you call price to be determined. Now you would have, like, no, in the previous sessions you would have studied on anti-dumping duty, then countervailing duty. So I, as a proper officer, will try to look at your past history. The goods which are being imported by you, whether are they subjected to anti-dumping duty, countervailing duty, or any special duty, whether there is any no concessional rate of duty, whether there is any preferential rate of duty. All these are the factors which determine, which make me to identify how to calculate this particular bond amount. Then a general running account is maintained wherein debit happens for into bond, credit happens to X bond. I gave one example, right? Debit side, credit side. When I take the goods into warehouse, debit. When I bring the goods out of warehouse, credit happens. So this running account is where I try to say, sir, already there's a bond given for 1 crore. There's a balance of 40 lakh. This consignment is worth around 20 lakh. Please permit me. So he'll try to take that particular bond. He'll try to examine the records and he will permit on the basis of your running bond balance, which is available. Now, in general, you have this public, you have a private, where on a day-to-day regular basis, when you have consignments into India, consignments out of India, you have this running account, the bond account, which will be relevant for you to justify to the proper officer. Now, period for warehousing the goods. Students, I'm trying to make this concept very, very basic level with examples to make you understand. Please make a running notes as you listen to me. Post listening to me, please visit your institute material to have a better understanding of these concepts. Now, I understood warehouse, I understood the formality, I understood the permission, how do I get, I understood where all I can store money, public, private, special. I also understood the general bond. I understood when a cancellation happen, how a cancellation will happen. Now, one important factor is how long I can hold this material in a warehouse. These goods which are there in a warehouse, what is the tenure? If I use it for manufacture, if I use it for assembly, if I use it other than these activities. For that, this concept explains like this. Warehousing where manufacture or other operations are permitted. In case my manufacturing activity is undertaken or other operations, please keep in mind, when I say manufacture, all of us understand. Other operations, packing, repacking, labeling, relabeling, or assembly. Any of these activities I can call manufacture or other operations. So they say, in case of capital goods, till their exporting, I can retain in warehouse. There is no time limit. Capital goods, till their exporting, I can retain in warehouse. Other goods, till their exporting or consumption. In case of packing, repacking, labeling, relabeling, till I consume, I can keep in my warehouse. Once I have done that activity, boss, I have to do my exporting. Now, no interest is payable on above goods till they are allowed to be retained in warehouse. Please keep in mind. Examination, I'll take you through one problem, how to do the calculation. Interest calculation, please expect 4 marks question. A couple of exercises I have given the problems. I'll teach you how to do the calculation. In case of manufacturing activity, in case of other activities permitted, till the capital goods are there, expanded, till other goods are expanded or the consumption happens, I need not pay interest. There are other category. In case of goods other than manufacturer operations, which I intend to carry out, 1 year from the date of order, permitting the goods to be warehoused from custom station. So here, other than manufacture, you have manufacture or other operations. I call the category. I call category 2. So what I have to do, please do your homework. So what is the nature of goods I am intending to warehouse? The goods which are intended for warehouse needs manufacturing activity, needs packing, repacking. Now that I put into category 1. I call this as category 1. Sir, goods which are brought are raw material. I use it in my manufacture in the regular production. I call category 2. I call category 2. So please determine what is the nature of goods. Is it fitting into category 1? Is it fitting into category 2? Sanjay is asking a question. So what do you mean by till their ex-bonding? Once I do a manufacture, I ex-bond, I take out of my factory. So till the manufacture, I am permitted to store those items over there, Sanjay. Ex-bonding, okay. Till their ex-bonding, is there a time limit? Till their ex-bonding is, I take out of my warehouse, I call that is not ex-bond. So I can manufacture and I can retain those capital goods till I don't file ex-bond, I am permitted. So I'll give an example this way. Let's assume capital goods, Sanjay. Again, for brevity of other students. What do you mean by till their expounding, till their expanding? Now, with respect to capital goods, putting a time limit is not possible. Not possible. Like I was giving example of a DG set. Now the DG set has come. I did a assembly. I did the cabling. I have to do a testing activity. Now when I do testing activity, first like I do a manufacture. I do my internal test. Once the testing is over, I prepare test report. Then my customer, he will come himself or his authorized agent, his appointed agent will come to the premises. He will do a testing activity. Once both the tests are done, then I do the expounding activity. So now in case of manufacturing, judging the time factor, 3 months, 6 months, 9 months, 1 year may not be possible because of various reasons involved in that particular activity. So in general, they say in case of capital goods, till they're expounding, I can permit to keep the goods in my bonded warehouse. Am I clear, Sanjay? If not, I'll explain once again. Sanjay, Yogesh, Prithvi, let me know if you have any doubts. Sanjay, can I go further now? Great. Now, in case of other category, in general they say 1 year is the time limit from the date of order. From the date of order, that means to say the proper officer, proper officer gave a order for warehouse. So from the date, like assuming this order was passed on 1st Jan 2025. From here, 1 year is till 31st December 2025. So up to 1 year, I can hold the goods in the warehouse. Now, there are circumstances where proper officer may not give 1 year, may give 3 months, may give 6 months, may give 5 months. Now, no, you cannot question them. Sir, loss is 1 year. Why are you not giving 1 year? Depending on the industry, depending on the susceptibility, depending on the risk parameters, depending on the control parameters which the government feels that it is not suitable. So the proper officer may decide that instead of 1 year, he'll give any other time less than 1 year. But in general, 1 year is a time which is permissible. Now, this is a general provision. In case of any other category of goods, 1 year from the date of order, permitting the goods to be warehoused in the customs station. Now, interest at the rate of 15% is applicable on the duty deferred beyond a period of 90 days. Beyond a period of 90 days. When I try to erase, my screen puts off. Just give me a minute. Please keep in mind, law has given me 1 year. Law has given me provision for 1 year. But it says, look, I have deferred payment of customs duty. But doing so, there's a revenue loss. So the provision says that beyond a period of 90 days, I can defer subject to interest of 15%. So here, now this is where government wants its pie also. See, not every time I have to look for your business. I have given an option. What? You get the consignment into India, you pay the, file a bill of entry, pay the customs duty, take the material. Because of business requirement, instead of taking to the domestic tariff area, I gave an option called warehouse. I gave a permission for 1 year, but please, beyond 90 days, you have to pay interest. Why? You're deferring your payment of customs duty, pay me interest. Now, this is where interest comes into picture. So the goods which are put into a warehouse beyond a period of 90 days, then interest gets paid when I file my ex-bond bill of entry. I have one problem, students. I'll teach you how do we calculate this particular interest. Students, we are at 8:34. Let's have a break of say 10 to 12 minutes or say 10 to 15 minutes. 8:34, 8:35, 40. Around 8:45 to 8:50, let's resume back. Let's continue with our discussion. Okay? Let's have a break for 15 minutes. Thank you. There's one question from Sanjay. So what kind of manufacturing could be allowed in a warehouse? Do manufacturers have such facilities in warehouse to manufacture, especially where complex equipment may be required and a permanent factory should also be required? I'm a bit confused. Can you elaborate on this? Definitely, yes. Imagine this concept of EOU. Imagine this concept of free trade zone, special economic zone. Similar to that, you also have this bonded warehouse. This is not something new. Only that because no, we don't get exposed during the period of article share. We have that ambiguity. When they say manufacturer, I gave an example of DG set, right? Typically, that's a private warehouse. You have no, it's all full infrastructure. I'll give one simple example. I don't know how many of you have visited to SEZ location. Whenever we visit a SEZ location, you're at the gate entry. You will be scanned for your items, your permission, like from the SEZ unit. They have to take a permission. SEZ officer should permit you to go inside the SEZ location. For a moment, you're taking laptop, mobile in the process of your internal audit, statutory audit. You need to give a declaration that these goods are being taken to SEZ for the purpose of so and so, and they would be properly brought back to the satisfaction of the proper officer. And if he believes that these items cannot be having an identity established, then he will bar you from taking those goods into the SEZ location. So when we talk about bonded, this warehouse, there are activities which are carried out in not that heavy machinery and engines and all, but yes, predominantly basic manufacturing like machine, oiling, greasing, those things would be part and parcel of that. So answer to your question, Sanjay, yes, there are activities which you see in normal course of time would also be covered in this particular premises. Hope this is clear, Sanjay. Coming back, we learned this concept of 90 days. Now, moving forward. Rights of the owner on goods warehouse. Now, in general, sir, my goods are kept in warehouse. What are my rights in this regard? So these goods which are kept in a warehouse, I can do an inspection of these goods. I can ensure that these goods are not deteriorated or don't get damaged. So adequate measures I can take on these goods which are kept on a warehouse. Sorting, I can do the sorting of the goods. I can show these goods, demonstrate for the purpose of sale to any intended buyer. Manufacturing and other operations. Owner of the goods permitted to undertake manufacture or other operations on the goods kept in a warehouse. Post such manufacture, these goods can be either exported or cleared for DT, domestic tariff area. Duty should be payable, should be fully remitted on such goods exported. So in case if I have exported the goods, there is a remission of duty. That means I need not pay customs duty. Goods have come into customs station, manufactured, went out of India. So there is no question of customs duty payment. Now, one important point, continuation to what Sanjay was asking. So when you do a typical manufacture, there is a possibility of scrap. There is a possibility of refuse. There is a possibility of defect, right? So whenever I do manufacture, I cut some items, small loose wires and other things. Those gets generated as a scrap, right? Now, how do we deal with that particular scrap? We will understand in due course of time. This activity of manufacture is not permissible in a public warehouse. So where I can undertake if it's not permissible under public, private warehouse and special warehouse. Permissions for inbound manufacture can be given by a principal commissioner or commissioner of customs. Now, Sanjay, to answer your question, this is one another important point now. In general, commissioner or principal commissioner alone can give a permission, not by a proper officer. That means AC, DC, superintendent, or a joint commissioner. Now, this is an important point we need to understand. Now, what happens if there is a waste or refuse generated out of this manufacture? Should I need to pay any duty? Answer is yes, I have to pay duty on such manufactured waste or refuse. That is in general. So if I have imported 100 kgs, I manufactured 95 kgs. 5 kgs residue, 5 kgs scrap is generated. Because you're not exporting entire 95 kgs, that 5 kgs could be subjected to the import duty. Duty shall be remitted on such waste or on such scrap if the goods are exported. So in case if goods are exported, there's a possibility to remission on the waste or scrap when subject to a condition that such waste or refuse are duly destroyed. So I imported 100 kg. I manufactured 95 kg, resulting scrap of 5 kg. Now you have two choices. Choice number 1, choice number 2. So 1, you destroy. Choice number 2, you clear to domestic tariff area. That is your, you sell as a scrap. So when you sell as a scrap, you have to pay customs duty. If we destroy that scrap, there is a remission of duty applicable. There is a remission of duty applicable. Examination, 4 marks theory in relation to the manufacturing activity, elaboration on the waste or scrap or refuse generated. And how do you deal with the duty payment on that will also be asked for. Alternatively, for all goods cleared for home consumption, corresponding duty is payable if such goods are imported in such form. So when you manufacture, you have option number 1, export. Option number 2, clear to domestic tariff area. When you export the goods, like you can export goods, but you cannot export scrap. You cannot export waste, right? Scrap is scrap, right? The value of insurance, freight, logistics, all that is higher than the value what you get out of scrap. So when you manufacture, you generally export the good items and you don't export the scrap. So the law is saying that whenever you are exporting your manufactured goods, you destroy that particular scrap. So when you destroy that particular scrap, they say there is a remission. There is a remission of duty payable on such particular scrap. So alternatively, no, I am clearing for domestic tariff area. When you are clearing for domestic tariff area, you pay duty on that scrap as if that goods are imported in such form. When I presume that you have imported goods in a scrap position, I collect duty on that particular scrap. This is what law is mentioning. That means there is no escape from payment of duty. I have to mandatorily pay the duty. Now, already we have discussed the goods which are kept in a warehouse. I can transfer to another warehouse with the approval of proper officer. I can file ex bond bill of entry to clear for domestic tariff area. Ex bond bill of entry. Ex bond is I take the goods out of my warehouse. Third, relinquish the title to the warehouse goods before an order for clearance for home consumption is made. Relinquishment of title to warehouse goods. Sir, I have received the material. I don't want this material. Relinquishment, giving away the title to the goods. There's one Hindi movie called Badmash Company. I don't remember this hero's name. Badmash Company, where this hero imports pair of shoes, but he gives an instruction to the seller that don't say no, give both left and right leg shoes. Send a consignment of left leg shoes. When the shoes gets no consigned and reaches the customs port, he says, "Sir, I ordered for a pair of shoes, but by mistake only no left leg shoes have come. What will I do with this left leg shoes? I'll no abandon. I give up. I relinquish my title to those goods." Now, the friend of hero will go for an auction because even customs authorities cannot retain that. So, customs authorities will put it for auction. The friend of hero will go and at a nominal price, he'll pay the customs duty and get those goods cleared. After a point in time, the right leg shoes comes again to the customs station in some other port. Again, as usual, he'll go and say, "Sir, I ordered for a pair. By mistake, only one leg shoes have come. I don't want." He relinquishes. He gives away title to the goods. Now, again, his friend goes and goes for an auction. Again, pays a nominal customs duty, get those shoes. What they will do? They assemble that left leg, right leg pair, makes as a pair, and they sell in the local market. Now, assuming you have the same shoes sold for 2,500, I sell for 2,000 rupees. Why? I save customs duty. Maybe not 500, say 200, 150, some margin is there. I sell those goods at a lesser price than the intended price. Now, this is just a hypothetical example of this Bollywood movie where they have used this concept called relinquishment, giving away the title to the goods. So this is in general also there is a possibility that the importer doesn't want to have the possession. He gives away a title to those goods. Now, when can he give? He can give that relinquishment before order is made. When order is made, he cannot. The duty has been fastened. Though he doesn't want the goods, he has to pay the duty. This is one another MCQ question from your examination point of view. If the importer want to relinquish the title to the goods, he can do so before order for clearance of goods for home consumption is made by proper officer. So if the order is made, he has to pay the duty, he has to pay the penalty if applicable on those goods. Those goods which are kept in the warehouse, I can rather export out of India without payment of duty. So these are the 4 permutations and combinations permissible for me. I can transfer, I can file ex-bond bill of entry to clear to domestic tariff area. I can give away title to the goods or I export out of India. Improper removal of goods. Now there is a concept called improper removal of goods. Now, this is meant to say you violated the customs provisions. So goods removed from a warehouse other than above circumstances. You have 4 circumstances, right? Other than those 4, you have removed the goods. Then it is considered as a violation. It is considered as a violation of various norms. Sir, is there any scenario where this situation comes into picture? Answer is yes. Smuggling. I import 100. I say, sir, only 98 are there. Balance 2 are not there. What happened? Pata nahi, sir. I don't know, sir. Key is with me. My custodian is 24/7. He is awake. He didn't sleep. Poor guy. He was there watching the material like that for 24 hours. All that, no. Ultimately, the goods which have been imported are not in existence in a physical form. That is called as your removal of goods. Any contravention thereof, proper officer shall demand duty. Now, this is one aspect. Other than this aspect, goods removed from a warehouse other than. Now, this is one circumstance. Another circumstance we can imagine is goods ought to be removed but not removed. Sir, I have been given 6 months time. I didn't remove within 6 months. The day that 6 months gets over, that is called improper removal of goods. That means you have to remove but not remove. I presume that these goods have been removed. That point in time, I collect duty, I collect interest, I collect penalty, I collect fee in case if applicable. You have to be doing that job within a given point in time. Because you're not done the job, I collect the duty along with interest, along with interest, along with penalty. Any contravention thereof, proper officer shall demand duty, interest, penalty on the goods warehouse. What if you're not willing to pay, or no, though the duty has been demanded, you have not made proper payment of tax? Then the provision says that proper officer may detain and sell such goods. If you remember, under GST law, there is a provision called Section 130, which talks about confiscation of goods which are carried in violation of GST provisions. I take a consignment. I, as a GST officer, hold the consignment. Owner of the goods doesn't come forward. I have to fasten the GST liability. I have to recover the GST liability. Because the owner is not willing to pay, or he says, I don't have money, I, as a proper officer under customs law, similar to GST provisions, I detain so much of the goods where I sell to make good of my duty, penalty, interest, fine, for collection of the tax. All that I'll do after compliance with principles of natural justice. Whenever I say principles of natural justice, issuance of a show cause notice, putting the assessee, the importer at notice, listening out the noticee, taking a written representation, if any, by the noticee, examining the circumstances, and then finally passing a relevant order. Now, custody of warehouse, we have discussed already. There's a person called bond officer in case of a special warehouse. As on today, there are notified goods for which there is a government officer called proper officer who is permitted to do the supervision of this particular warehouse. In case of a private and public warehouse, we appoint a person called custodian. So in case of private warehouse, licensee shall appoint a custodian. Records in warehouse, the records have to be maintained in a digital form, and these records have to be maintained for a span of 5 years from the day order for X bond bill of entry has been passed. I mean to say, whenever the goods are taken out of warehouse, from that particular point in time, 5 years, I have to maintain these records. Now, these are the provisions which are connected with your warehouse. Now, it's time for us to practice a couple of problems to have this concept understood in a better fashion. Students, hope you are able to see my Excel file. Yeah. Now, quickly, let's have a recap of chapter 2, which we have dealt with valuation of goods. Chapter 2, which we dealt with valuation of goods. When you read this Customs Tariff Act, we also have read a couple of provisions connected with Customs Act 1962, which dealt with how do I apply my rate of exchange. Also, how do I apply my rate of exchange, determination of rate of duty on the goods, what I have to pay. So just for your, refreshing your mind, there's a provision called Section 14(1)(4) under Customs Act 1962. As per Section 14, it says that how do I apply rate of exchange? When goods are imported, it is in foreign currency. For calculating the value in INR, I need to adopt exchange rate. So as on today, I have 3 sources for looking at exchange rate. One is rate given by RBI. One is rate given by CBIC board. Third, there's a Federation of Exchange Dealers Association. We call FEDA, FEDA, Federation of Exchange Dealers Association. These 3 institutions determine what is the exchange rate for foreign currency. So as per this particular Section 14, the date on which bill of entry is presented is a date relevant for my exchange rate calculation, right? let us do the calculation of my value considering this particular provisions. Example number 1. Just let me stop and share it back again. Okay, question number 1. Yes, Sanjay says rate of exchange on the date of filing bill of entry by CBSE is relevant for my calculation of customs duty. Value under INR. So in this example number 1, my date of import happened on 25th June. Filing of bill of entry happened on 28th June. My conversion rate on 25th June is 89 per dollar. On 20th June is 95 per dollar. Students, hypothetical discussion. This will not be so fluctuating. Just for the sake of academical calculation, we are doing this calculations. So here, when I calculate my value in INR, I'll say 96,000 into the rate prevalent on the date of filing of bill of entry is 95. So this happens to be my value in INR. Value in INR. Right? So this is how I calculate my conversion rate. Let's understand for case 2. My date of import happened on 29th July. Filing of bill of entry happened on 31st July. What would be your scenario 2? What would be your answer, ma'am? Good, ma'am. Sanjay, for scenario 2, what would be your answer? Triple 5,750. Okay. Let us see that. Yogesh says, yes, both of you are right, ma'am. What I'll do is 5,85,000 into I cannot see my mouse. That's a problem. Okay. Let me see how to get my mouse back. When I present my screen, my mouse is not appearing. Okay. In case of second scenario, I'll apply 585,000 into 95. I get 555. Similarly for scenario 3, it's in euros. I have date of import on 30th September. Filing of bill of entry is on 8th September. What would be my conversion rate? Scenario 3. $772,500. Okay, let's see that. I have 7,500 into 103. 772,500. So that is your answer. Now, similar to this, I have the same analogy applied for filing a into bond. Now, this is, I'll explain one scenario. You can calculate for other scenario. Scenario number 4. I have a date of import happened on 16th June 2025. Incident 1. My date of into bond happened on 28th June when the conversion is 95 INR per dollar. Date of order passed by the proper officer is on 30th June. My X bond was filed on 30th September. Now, for the purpose of section 14, what would be my INR value? So here, like you're filing a bill of entry, the day when you file your into bond under section 46, that would be the relevant date. So answer in this scenario will be $108,000 in foreign currency into conversion rate of 95 rupees, which is prevalent on the day when I file into bond, is to be considered. I repeat, the day when I file my into bond bill of entry, this is as good as your bill of entry, that is relevant. The day when the order is passed is not relevant for me. Though order has been passed 2-3 days later, 1 week later, the day when I file my into bill of entry, this is important. Hope this is clear, ma? Both Yogesh and Sanjay. Let's do a calculation for scenario 5. Scenario 5, I have my date of import. My date of import happened on 12th August. I filed 15th August my into bond. My order passed by the officer is on 18th August. My ex bond taking out of the warehouse on 30th September. What is your value of import? 9,000 into 103. Yes, both are correct. Perfect. So this is where you get a 1 mark MCQ with respect to application of your what do you call this one conversion rate. Now, from here, let's move on to second model where okay, here I have to calculate my duty interest in case if it is payable. This is second model. Goods are imported by ABC Limited during September 25 for one consignment. It has been observed that vendor by mistake December 25 order has been shipped earlier than actual planned consignment. So what this is, the consignment which is due in December by mistake was received in September itself. Okay. So December 25 order has been shipped earlier than actual planned consignment. So what happens in the business regular course? It is decided that it is decided to warehouse the material. It is decided to warehouse the material and below details are provided. What is that? Date of arrival. Date of arrival of the vessel 25th July 25. On that day, exchange rate is so and so, rate of duty is so and so. Date of into bond was filed on 15th August, where the exchange rate and the rate of duty is also given. Order for warehousing the goods given on 25th August 25 with a permission given for 4 months. The order was given by the proper officer on 25th August 25, where he gave a permission for 4 months. Date of ex bond was filed on 1st Jan 2026. Date of ex bond was filed on 1st Jan 2026. Exchange rate on that day was 72. Rate of duty is 15%. So what they're asking for the given about 25th December, exchange rate was 70. On 25th December 2025, the details of exchange rate is 70 per dollar, rate of duty is 12%. Now, there are 3 instances they have given to you. One is arrival, into bond, warehousing, date of ex bond. Now, when was this order given? My order was given on My order was given on 25th August 25. So here, this order was valid for 4 months. So this 4 months gets over on August to September, September to October, October to November, November to December. On 25th December 25, your tenure of 4 months gets over. But when did this X bond was filed? X bond was filed on 1st Jan 2026, right? Now, first, we need to calculate what is the value in INR. Second, we need to calculate what is the rate of duty. What is the rate of duty I have to apply? Here, I have rate of duty 12%, 10%, 15%, 12%. So, out of these four options, what would be my rate of duty as per Section 14, read with Section 15 of Customs Act? I'll give you 2 minutes. Do your calculation, give me the answer. Then I'll help you with the answer. How to calculate? I'll give you an answer. Take 2 minutes, make an attempt to solve this problem. Then I'll help you to solve this particular problem. Okay. What is the amount? I did not give you the amount. So assuming amount is $48,000. This is my $48,000 is the amount. For $48,000, what is my value in INR? What is my rate of duty payable on these goods? Calculate your value in INR, calculate your duty on that amount also. Duty also, Sanjay. Yes, Yogesh. Both Sanjay and Yogesh. Both of you got the same answer. The duty, what would be the rate of duty? Amount duty is 3264. Is it okay? Into beyond bill of entry. Okay. Now, please remember. Under Customs Act, you have Section 14, Section 15. Section 15 of Customs Act says that how do we determine rate of duty? If a bill of entry has been presented before the date of entry inwards of the vessel or arrival of the aircraft or the vehicle by which goods are imported, bill of entry shall be deemed to have been presented on the day of such entry into or arrival. So here, in case of warehouse, the day I file my into bond is not relevant. The day on which the order permitting or the goods are taken out of the warehouse is relevant. That means to say, I have removed X bond. The day on which X bond bill of entry is filed, that is the rate of duty. If that X bond was filed on a proper time. If X bond was filed much later, the day on which importer ought to have been filed is important. So in this scenario, the date of X bond, was on 1st Jan 26. But as per the permission given, the importer was ought to file the X bond on 25th December. By 25th December, from 25th August, my 4 months gets over on 25th December. So here my rate of duty, the rate of duty available on that particular day which gets over is important for me. This is what we need to keep in mind. So here value in INR I would say 48,000 into bond bill of entry. On the day, my conversion rate was 68. So value in INR is 32 lakh 64,000. 32 lakh 64,000. Both of you got the same answer. In conversion, continuation, my customs duty at the rate of 25th August, my rate of duty was 12%. Was 12%, right? So my customs duty happens to be on 32 lakh 64,000. 12% happens to be 3,91,680. 3,91,680. Now, should I need to pay interest here? Both of you, Yogesh and Sanjay, should I need to pay interest? As per law, beyond 90 days, interest has to be paid, right? So answer is yes, I have to pay interest. More than 90 days, I have to pay interest. So here, when I talk about interest, answer is yes. That is beyond 90 days. So when I say, I'll plot here, 25th August 25. From there, 90 days gets over on 23rd November 25. But when did he remove the material X bond? On 1st Jan 26. 1st Jan, sorry. He took the material out of the warehouse, right? So here in 23, I have 30 days in November, 7 days, 8 days, I would say, including 23, 8 days here. I would say 8 days in November, December, 31 days. 1st January, anyway, is going to pay. So these are the days for which I have to pay interest. What is the rate of interest, ma'am? Interest is applicable at the rate of 15%. Yes. So here on duty, my customs duty is 3,91,680 into 15 by 100 into 39 days divided by 365. I repeat, my customs duty is 3,91,680. On that, there was a delay for 39 days. Rate of interest is 15%, 15 by 100 into 39 by 365. My value of interest payable. So duty 3,91,000, 6,277 interest. Penalty, officer may levy in case if there is a violation. Fine, probably derogatory of officer to levy a fine. So this is how I calculate my model number 2. Delay in your what you call consignment. I pay duty, I also pay interest. Before I go further, any doubts? There's one more problem. Okay. Sanjay says, okay. So can you please repeat why duty rate is as on 25th December? Okay, ma'am. See, Sanjay, like I have 4 events, ma'am. Date of arrival, irrelevant for us. Date of into bond is relevant for converting foreign currency to INR. Please keep in mind, reference to section 1(4) of Customs Act. The day when I file my bill of entry, into bond bill of entry is relevant for converting foreign currency into INR. For the purpose of rate of duty, filing bill of entry or actual arrival, whichever is later, is relevant. In our case, my later, that is when the goods are taken out of warehouse, is relevant. I have filed bill of entry earlier, but the goods are being taken later point in time. So here into bond is not relevant for me. Into bond is not relevant for me. What is relevant for me? The day on which I ought to export the material, that is relevant for me. Here, as per the order, my due date is 25th December. But what did the importer do? On 1st Jan 26, he tried to make a export. There was a delay. Because there was a delay, the due date on which the order permitted to remove the goods was 25th December. That is my important date. Hope this is clear, ma'am. Sanjay? Yes, Yogesh says This will come into improper removal. This is improper. Because it is improper, the day on which I'm supposed to remove, I would go for that particular day. Both of you, right? Yogesh and Sanjay, yes. Examination, wait and watch. Easily you can score 4 marks. It's not complicated. This is where you have to focus how to score in your examination. Then third model. Now this is a model where I know what you call import the material, I manufacture, maybe goods go out of India, maybe goods cleared for your domestic tariff area. Now, these are the two circumstances which are covered here with respect to goods manufactured in a warehouse. Now, let's understand this example. Where waste or refusal of goods manufactured exist. Question is like this. Perfect Tools Limited have imported steel ingots and used following components to manufacture precision tools. Details of import and consumption pattern is as below. Now, there are goods which are imported. There are goods from domestic tariff area brought into your this particular warehouse. Steel goods imported 12,000 kgs. Now, this is an import item. Blackening powder applied 50 kg. Soldering metal applied 20 kg. Coolant oil 100 liters. I converted this into kgs. So 100 liters, if I convert into kgs, roughly based on the density, mass, based on the item, that will be around say 95 kgs. Total tools manufactured. Out of these components I have used, I manufactured 1500 tools. Each tool was weighing 750 grams. Now, out of these tools manufactured, I exported 1200 pieces. I cleared 300 pieces to domestic tariff area. That is your home consumption. Now, I need to calculate what is the refuse in relation to exports, what is the refuse or scrap in relation to home consumption. Hope this question is clear, ma'am. Before I go with the answer, is the question clear for both of you? Yeah. Now, I'll plot this particular quantum on the right side. Goods imported 1200 kgs, I'll take as it is. Blackening powder 50 kgs. Soldering material 20 kgs. Coolant oil liters converted, I'll take 95 kgs. Then total coolant oil 95. Only 4 components are there. 1, 2, 3, 4. Now total, this is my raw material which are relevant. 1365 kgs is what I have used. My finished goods, what I have manufactured is 1500 pieces into 750 gram. I will say 0.75. I get 1125 kgs. How much is the wastage? Wastage 1365 minus 240 is wastage. Now this residue for exports, how do I calculate? I'll say 1200 is my imports, right? That divided by my total consumption is 1000. My exports is 1200 pieces, right? 1200 divided by 1500. My total manufacture is 1500. Of that, exports is 1200. This multiplied by 240. I'll get my residue in relation to exports is 192. Similarly, residue for home consumption. What I will do? So 300 pieces are home consumption out of 1500 pieces. That into this 240, I get 48 kgs. Now, please keep in mind, this is in kg, this is in kg, right? Now, out of 192, my import steel in 192 kg. How do I find? What I'll do? I'll say, sir, out of, okay, I'll just put this on this thing. Yeah. Sir, out of 192 kgs, my import is 1200 out of total 1365. So I get 168 kgs worth steel ingots which were there in the residue which were imported. Similarly, imported steel in 48 kg. Sir, I have 48 kg residue. Out of this, 1200 is the imported. Out of total consumption, 1365. I'll get 42 kgs. So this is my residue which is there in the steel which was neither exported nor cleared for home consumption. Now what I'll do? Remission. Because goods have been exported, there's an option called remission. I remit the duty if the steel has been destroyed. So what if the steel is not destroyed? As if the steel has been, the scrap has been imported, I would pay the relevant customs duty. Students, are we clear with this calculation? One is that 192 and 48 kg, the waste. In that particular residue, the composition of import material per duty calculation. So examination, by and large, these are the areas which would be relevant for you for understanding. Students, I have given one MCQ. What I will do is next class, we have on Sunday, we will start with MCQ and then we will start with our regular discussion. And this Excel template, I'll put it on the assignment. Sanjay says, how did we... Sanjay, how did we arrive the ratio? This 192 and 168 you're asking, ma? Okay, look at this, ma. Okay. See, you got 192 kg till here, we are clear, right? See, 192 kg, what we are saying? Out of exports divided by total manufactured into scrap, I get residue pertaining to export, residue pertaining to home consumption. Now, this 182 kg, when we see Sanjay, this includes all the four components, right? That is steel ingots, blackening powder, soldering, coolant oil. All this together, when I manufacture, there is a residue which comes into existence, right? So what we will do now, out of this 192 kg, I want to know the value of that steel ingot which is imported, which sits in this 192 kgs, which sits in this 192 kg. So how do I calculate that? I'll say 192 is my residue which sits in my export. Now, if I calculate what is the composition of imports out of 1365 total ingredients together, 1365 includes 1200 which is import, right? So when I put that proportion, I get out of 192 kg, 168.8 grams is what kgs is what the steel ingots which is sitting in 192 kg. So ratio upon that ratio, correct now? 192, all four, it consists of your coolant oil, black powder, this steel ingot. From there, again, we are removing what is pertaining to steel ingot. Sir, why do I do that? Now, when I have to assess as a proper officer, I'll say, hey, look, the 300 pieces you're filing a ex-bond bill of entry, pay the relevant duty. Exchange rate we know, rate of duty we know. So I calculate that both on 300 numbers. In addition to that 300 numbers, this 42.2 kgs steel scrap, which is cleared for domestic home consumption, I'll also collect duty on that particular 42 kgs. So what will I do with that 168 kgs? 168 kgs. 1200 I'll export. Definitely not scrap. Now, what options we have? Option number 1, destroy 168 kgs in the warehouse. Option number 2, No, sir. I'll clear for domestic tariff area. When you make a home consumption on that 168 kgs, again you would be paying the customs duty as if that no, scrap has been imported. Yes, ma'am. Yogesh, you're right, ma'am. For simplicity, I have put it in this fashion. You're right, correct. Can we go further, both of you? Done. Now, we deal with refund under customs law. We have another 20 minutes or I'll give you a background and then I'll make you to run through this refund under customs law. We dealt GST law, right? Similar to GST law, the same concepts are applicable even in our customs law. Now, a couple of differences. I'll try to make you understand this one. In case of customs law, what are the circumstances under which a refund may arise? A refund may arise. Now, when we talk about customs law, I have two scenarios. One is import, one is export. Import, when I file my bill of entry, I pay my customs duty, right? I pay my customs duty. Export, if goods, when I file my shipping bill, or bill of export, if the goods are subject to, export duty, then along with the shipping bill, I would pay my export duty. So why would I pay export duty? What could be the reasons? There are some items which government of India doesn't want to have export. They want to make those goods mightier for the person who's importing those goods. Like one example, let's say wheat, rice, onion, potato, which are essentials for the local person. Now we have, like, say, mangoes. Mangoes are seasonal fruits. March is where, no, March, April, May, we would have these mangoes for our local consumption. Now, instead of selling mangoes in India, if everyone wants to export out of India, what will I have? So, government also wants to protect the interest of this local citizen, right? So, what they would do is they don't ban, rather they levy something called export duty. If you're exporting rice, which is worth, say, 50 rupee per kg, when you export, you get 80 rupee per kg. They say export duty is 50% of the consignment value. So on 80, 50% happens to be 40, 120. So person who is importing, instead of paying 120, rather he will buy locally, which is available for 80 rupees. So this is where the government also wants to protect certain goods which are going out of India, right? Now, I have paid customs duty. After paying customs duty, I found that I have excess paid. Why? Self-assessment, I erroneously paid excess. I have paid excess. Or before the assessment, like provisional assessment resulted in refund. In the sense, I have gone for a provisional assessment. As per provisional assessment, I was asked to pay 5 lakh rupees. At the end of the provisional assessment, they found that actual duty I have to pay is only 3.5 lakh. The balance 1.5 lakh is resulting in a scenario called refund, right? So one, I did a mistake by doing a self-assessment. Two, there was a provisional assessment. Or three, there could be a scenario where there was an order by a tribunal, by a high court, or by a Supreme Court. There was a dispute. Because of the dispute, I went into the appeal mechanism. I got a favorable judgment. So the day when I get an order, I am entitled to get a refund. other than these three circumstances, in general, these are the general circumstances I talk about: import duty, export duty. Now, what we are talking is customs law, unlike GST law. There is no benefit of input tax credit, right? So when I prepare my cost sheet, whatever customs duty I paid, but the basic value of material, on that I add my customs duty. So my selling price inevitably includes the customs duty, right? So the customs law expects that, look, you file your bill of entry. Whenever you're filing bill of entry, in case of the refund arising on account of import or export, they ask us to prove something called unjust enrichment. Establish that the duty what you have paid either on export or import, why should be refunded back to you? Got the point? The government says, Baba, you are coming to me for a refund. Okay. Tell me, why should I give a refund? You will say, sir, so and so reason I paid. This resulted in so and so thing. So please give me a refund. Now, then government officer will say, okay, I admit your point. To give this money as a refund, prove me that you are not going to enrich unjustly by giving this money as a refund to you. Rather, instead of giving to you, why should this money not be credited to consumer welfare fund? So by default, under customs law, expectation is on the importer, expectation is on the exporter to prove that, see, you wanted a refund. I don't mind giving you a refund, but prove that this money what you are claiming as a refund is due to you as an importer or due to you as an exporter, and the burden of that particular duty has not been passed on. The burden of such duty is not passed on to customer. So this is what the customs law is expecting, unlike your GST law. In GST law, certain circumstances, this aspect of unjust enrichment is expected. I don't know how many of you have read that CA certificate. Under Rule 89, Sub Rule 2, Clause M, when a CA certificate is given, always know the chartered accountant say, I hereby certify so and so amount is due to so and so GST taxpayer, and I do confirm that there is no unjust enrichment. That means to say, the money if I have paid to the particular taxpayer, the taxpayer is not going to enrich himself on account of customer. That is what expected in GST law in few circumstances. But under customs law, by default, this is an expectation. Why? We have the concept of ITC not available under customs duty, right? These are the basic preamble, what we need to understand. Continuation to this. Whenever I file my refund application, what is expected? Evidence. The proper officer says, give me an evidence why this refund has to be given to you. On what account this money has become due to you. This is what is expected. Evidence is your documentary explanation to say that you as the importer have paid the duty. Now let's take an example. For a moment, Yogesh, Sanjay, and Prithvi. Yogesh is an importer. He transferred the title to goods to Sanjay. Like I will say importer 1. Then he becomes importer 2. Sanjay in turn transferred the title to Prithvi. Prithvi is the person who filed bill of entry. Right? So when Prithvi has paid the tax, assuming a situation, Prithvi realizes that Sir, I have to pay 30 lakh, but erroneously I have paid 32 lakh. I have paid excess of 2 lakh rupees. So here, Prithvi goes and files a refund application. So when a refund application is filed, the bill of entry shows name of Prithvi, but the import invoice will be having a name of Yogesh. So proper officer will say, yeah, how did Yogesh name got converted to Prithvi? Then Prithvi has to give the chain of events. Sir, Yogesh is the ultimate importer. He transferred to Sanjay. Sanjay in turn transferred to Prithvi. Done. This is one evidence to say that though import invoice has a different name, your bill of entry has got your name. This is one instance. Second, he'll say, give me a documentary evidence. Give me a documentary evidence to say that this money of 2 lakh, why should I give it to Prithvi rather than transferring to Consumer Welfare Fund? Now, Prithvi has to prove himself, wherein in the balance sheet, assuming this is your balance sheet, liabilities, assets, you have current assets. Under current assets, you'll have money due from customs authorities, 2 lakh. So in the balance sheet, this money should have been recorded as a current asset. That means to say, Prithvi should not have recovered this 2 lakhs. When he paid 32 lakhs, the burden of 2 lakhs should not have been collected from his customer. Rather, in his balance sheet, from his books of accounts, he has to establish that, sir, I am not going to enrich myself. Rather, I have not passed on to the customer. Please give that money as a refund to my account. Now, these are the submissions which Prithvi will be making to the customs proper officer. Now, continuation to this discussion, there is something called time limit. Under GST law, we have 2 years. Under customs law, they have given 1 year to file refund application. This is what they have said. All this is good so far. Now, there is one complexity with respect to these exports, where export duty has been paid, How is that going to work around? Say, there are goods which are exported. These goods are returned to India. That is to the same exporter. Why is that these goods are returned to India? Sir, it is of quality issue. It is a wrong consignment. There is a wrong description or wrong mismatch in the product. Now, various reasons I explain. When goods are exported, for a moment I have paid export duty. Export duty is paid. Now, since the goods have been coming back to India, what happens to this export duty? Should Yogesh claim refund of export duty? Answer is yes. A refund application is filed to claim refund of this particular duty paid. Whatever duty I have paid, I want to claim a refund. For that, Yogesh will be filing a refund application. Students, these are the basic aspects which we need to understand with respect to refund mechanism under customs law. Let me come back to my presentation. Application for refund of duty or interest. It could be customs duty, it could be interest also. Please keep in mind, when I pay duty along with interest, but I later realized that, sir, I mistakenly paid duty and also interest thereupon, then I can claim refund of interest also. The claim for refund of duty or interest can be made by person who paid the duty or interest, or person who borne the incidence of such duty or interest. That means to say, importer or the purchaser, that is the buyer. Either of these two persons can file a refund application to claim a refund. A claim by importer or exporter refund of duty or interest must be made before expiry of 1 year from the date of payment of such date, from the date of payment. So the day I paid the duty or interest, within 1 year, I have to file my refund application. Now, question comes when we talk about this 1 year. There is one aspect called protest. I have written here. Protest is written here. In case if you are paying duty under protest, there is no time limit. There is no time limit. This concept of protest is quite interesting. As a professional chartered accountant, as people who have expertise on accounting, auditing, and taxation provisions, use your decision wisely when you disagree for payment, but to protect the interest of interest and penalty. At times, you wanted to save the skin of the taxpayer. To save his skin, you pay under protest. The moment you pay under protest, till the matter attains finality, this time limit of 1 year, 2 years under GST or customs will be of no relevance. So this is one important tool. You should know when you should use that protest. Coming back. Claim by another person from whom duty was collected must be made before expiry of 1 year from the date of purchase of goods. Date of purchase of goods. So here, instead of importer, the person who has purchased the goods, if there is a direction from the government, then the application filed by the importer also. Like I'll give one example. If you recollect GST law, under GST law, filing a refund application. Refund application can be filed by the person who, the taxpayer who has paid the GST, the taxpayer who has filed a return under GST, or the buyer who has paid such GST can also file a refund application. Classic example, construction, the apartment building construction. Most of the apartments, we would say that buyer will go and pay the advance along with a GST. This builder will say, hey, look, you pay GST only if you're interested. Later, if you want to cancel, I'll give you a refund of the basic value, but not GST. Reason, I don't want to get into the ambit of the refund. Then buyer, government has enabled a window even for the buyers to go and file a refund application. Similarly, is the mechanism in my customs law also. Then, where the amount of refund is less than 100 rupees, it will not be refunded. So there is a ceiling limit. Like in GST law, we have 1,000 rupees. Any amount is less than 100 rupees, no refund is permissible. Concept of unjust enrichment, as I mentioned, the concept is to ensure that there should not be an enrichment. There should not be an enrichment. How? Unduly. By whom? The person who files an application. The person who files an application should not enrich himself unduly. So must be accompanied by documentary or other evidence. So first you should have a documentary evidence. To establish that duty or interest, I have to prove that there is an amount due which is called duty or interest, which is relevant for this particular application which I'm filing. Means I have to correlate, I have to connect the dots. Like I have a bill of entry. Now I have filed a refund application in general. They'll say, here I'm not understanding why you filed this this refund application. Then I have to mention, sir, bill of entry number 30945. This particular consignment. These are the items. There are 10 items. For one item, instead of 18%, I pay 28%. What happens? So the rate of duty is 18. By self-assessment, I did a mistake. So I have to correlate the instance. Was collected from or paid by him. Was collected or paid by him. Sir, I have paid that duty or I have collected that duty. And incidence of such duty or interest has not been passed on. So this generally, we have a habit of giving a CA certificate. Whenever a refund application is made, I go to a chartered accountant and say, CA certificate is enclosed. please give me a refund. Please keep in mind, dear students, we have to ensure that just because a chartered accountant is certifying, it will not be sufficient. I have to establish if no officer is having a doubt to believe. Now you need to prove, like no, showcase that said this is my P&L account. Look at my no costing, my expense. When I have expense where I have purchase cost. In my purchase cost, no, I have this AS2. As per AS2, the duties and taxes paid. This particular element of duties and taxes paid, I have not loaded. If you're not loaded, what happened? Sir, you look at my balance sheet. In my balance sheet, under current assets, I have parked as a money recoverable, money receivable. I have parked in my balance sheet. Now, this is where, in addition to, let's say, when you go for document evidence, just don't go with one simple declaration. Examine the bill of entry, examine the accounting entry, examine the cost, examine the entry in the current assets. No, determine what was the cost in the previous consignment, what was the cost in this consignment. These are the evidences which you need to collaborate, collective, to prove that you are not enriching yourself. Process of refund application. To get a refund, you have to file an application, which should be complete in all aspects. And it will be processed by a proper officer. And if the money is due, is processed to see if the whole or any duty amount paid by the applicant is refundable. So based on your document evidence, based on your application, proper officer is going to determine whether this money is due to be paid to you. In case whole or part money, either full amount or part amount, full amount or part amount, they determine and they pass an order to say that this money is refundable. In view of unjust enrichment, if the officer believes that this is having a non-satisfaction of unjust enrichment, then it will be, instead of transferring to the applicant, it will be transferred to Consumer Welfare Fund. Conditions stipulated for refund to the applicant, instead of transferring to Consumer Welfare Fund. Now, instead of putting to Consumer Welfare Fund, when will I give this money back to the applicant where I have proved that instance of tax has not been made, or it is meant for personal use. When I say personal use, there is no question of passing on the burden, right? That way. If the buyer who has borne the interest has not passed on instance, it could be a personal use or it could be a buyer. So in case of a buyer, there is no question of passing on. He also has to establish if it is used for business parlance. If the amount found refundable relates to export duty, which has returned, in case of exports, the goods should have been returned back to the India. And if the amount relates to duty drawback, there is no question of, in case of duty drawback, I'll not check the aspect of unjust enrichment. Then, in addition to that, government may notify that so-and-so class of people are entitled for refund. Then instead of giving to Consumer Welfare Fund, I'll give back to these people. In other cases, like, no, sir, I made a self-assessment. It is evident from my self-assessment that in bill of entry, I paid excess, or reassessment, provisional assessment or reassessment. Now, these are the situations and circumstances where instead of giving to the Consumer Welfare Fund, I'll give to the applicant. In case of export duty, I have explained these aspects. Goods are returned other than way of resale in case of export duty. Goods are re-imported within 1 year. From the date of export, within 1 year, that should come back. And refund, applicant for refund of such duties made before 6 months from the date on which proper officer makes an order. So when the goods are returned back, from the day order is passed by the officer that the goods which you have exported have come back. From that day, within 6 months, I have to file a refund application in case of export duty. Import duty shall be refunded to the person if goods are defective. I said specification. Goods are identified to the satisfaction of ACDC, as the case may be. And duty drawback has not been claimed. If the importer wants to relinquish his title, sir, I have paid import duty, but I don't want these goods. If he has relinquished its title, then also he can get the refund of that particular customs duty as a refund. So students, these are the provisions which are connected with our refund under customs duty. Next class we have on this Sunday. I would do a recap of the warehouse provisions. Also, I would do a recap of this refund under customs duty with a couple of examples for us to understand. After that, we will continue to with foreign trade policy provisions. Right? Till then, see you all. Good day. Ashok? Yes, Ashok.